So much excitement in the gold market this Thursday. Jim Wyckoff joins us now. What a day for gold, Jim.
Hello, Daniela. Indeed, a very exciting day.
Absolutely. Gold now at a 4-month high on the news that really shocked the marketplace. Switzerland giving up on a currency peg and really moving gold here, Jim.
Yeah, Daniela, in this day and age where the central banks like to telegraph what they're going to do, this move by the Swiss National Bank was just a shocker to the marketplace. In fact, some veteran market watchers are saying this the abandoning of the peg to the from the Swiss franc to the euros is probably the biggest news in the past 25 years. So the ramifications were significant, especially for the Swiss franc versus the euro, but also for the other currency markets as well. And we haven't seen the end of it, probably. The gold market rallied sharply on safe haven demand because of the uncertainty of the situation, and we now stand at a 4-month high.
Now gold rallied, and so did treasuries.
Treasuries indeed did rally. I mean, the SNB move on Thursday only added to keener investor anxiety that has been in the marketplace this week, and we've seen that by the volatility in the stock market. All of this uncertainty and the downdraft in the stock market that we have seen and the volatility at higher price levels all works in favor of the gold market bulls. And it does appear more and more that we are seeing a market bottom put in place in the gold market. Now, on the daily charts for gold, we're seeing a price uptrend in place. First time we've seen that in some time.
And with the news coming out of Switzerland, Jim, everyone's just thinking we're just moving closer to another round of quantitative easing in Europe.
Daniela, it's not a matter of if, it's just a matter of when the ECB makes its move. The January 22 meeting, it would not be surprising to see Mario Draghi announce plans for quantitative easing, and the marketplace fully expects that, and that's why you saw the Swiss National Bank make that move on Thursday, out ahead of the likely QE announcement from the ECB.
Jim, we also had news coming out of India this morning that their central bank cut a key interest rate by a 1/4 point.
Daniela, this only adds to the worries worldwide about price inflation being very low, and also worries about price deflation. The Indian rate cut also augurs in a bullish fashion for the gold market because it might free up some liquidity from one of the world's major gold importers.
On that note, Jim, let's get to your Wyckoff market rating for the week.
Well, Danielle, I'm giving February COMEX gold the Wyckoff market rating of 6. That's the highest rating we've seen in some time. That gives the bulls the near-term technical advantage. Bulls have more work to do, but they've come along pretty well recently. And right now, the path of least resistance for gold prices is indeed sideways to higher. I'm giving overhead resistance for February gold at the 1275 area. Solid technical support at this week's low of 1217.50. Looking at March COMEX silver, I'm giving it a Wyckoff market rating of 5.5. That's slightly in the bullish camp. The bulls have made some progress in the silver market recently. More work to do to suggest a price uptrend can be sustained, but they're working on it. Overhead resistance for March silver is located at $17. Solid technical support at $16.50.
Well, that's all the time we have today, Jim. Thanks so much for joining us, and thanks for watching this edition of Technically Speaking with Jim Wyckoff. You can email us at newsfeedback@kitco.com. Thanks for watching.